Let's get ready for the Minnesota real estate exam with 100 questions on state-specific laws, principles, practice, and more. And don't miss what's happening in the bottom corner. It'll be key to your prep. We'll tell you how in a minute. Now let's get started.
Let's start with a review of Minnesota real estate law and practice. Fair housing laws in Minnesota. Which of the following is not a protected class under Minnesota's fair housing laws? Is it A, race, B, age, C, disability, or D, sex? The answer is B, age. Minnesota's fair housing laws provide protection against discrimination based on race, disability, sex, and several other categories. Age is not listed as a protected category under these laws. In the context of Minnesota fair housing, what is blockbusting? Is it A, promoting property in designated historic areas? B, encouraging homeowners to sell due to changes in neighborhood demographics? C, buying land to prevent urban sprawl? Or D, investing in high-risk neighborhoods? The answer is B, encouraging homeowners to sell due to changes in neighborhood demographics. Blockbusting is the practice of persuading owners to sell property cheaply by suggesting demographic changes, typically for personal gain, which is prohibited under Minnesota fair housing laws.
Have you noticed the code in the bottom corner? Next time you're stumped, take that code to birdsey.ai for immediate help and a free study session with Birdsey, your personal AI study partner. Plus, you'll get access to hundreds of additional questions, helping you move closer to passing your exam with confidence. The next time you're feeling unsure or stuck, give it a try.
Which agency enforces fair housing laws in Minnesota? Is it A, Minnesota Department of Human Rights, B, Minnesota Department of Commerce, C, Minnesota Real Estate Commission, or D, Minnesota Housing Finance Agency? The answer is A, Minnesota Department of Human Rights. The Minnesota Department of Human Rights is tasked with enforcing fair housing laws, ensuring no discrimination occurs in housing transactions based on protected characteristics. Landlords in Minnesota may refuse to rent based on which of the following? Is it A, income source, B, criminal background, C, sex, or D, national origin? The answer is B, criminal background. While Minnesota prohibits discrimination based on protected classes, landlords may legally refuse to rent to individuals with certain criminal backgrounds unless selective enforcement results in discrimination. Under Minnesota law, which action constitutes a violation of fair housing laws? Is it A, providing housing preferences to veterans, B, denial of housing based on familial status, C, a blind preference for applicants with high credit scores, or D, offering reduced rent for senior citizens? The answer is B, denial of housing based on familial status. Denying housing based on familial status violates Minnesota's fair housing laws, which protect individuals against discrimination due to the presence of children under 18 in a household. In Minnesota, which of the following is a recognized discriminatory practice under the state's fair housing laws? Is it A, refusing to rent to someone based on income level, B, offering different terms for a lease based on race, C, requiring a credit check for all applicants, or D, limiting occupancy based on unit size? The answer is B, offering different terms for a lease based on race. Under Minnesota fair housing laws, it is illegal to offer differing terms of sale or lease based on race or other protected categories. This law aims to ensure equal access and treatment in housing. What is redlining in the context of Minnesota fair housing laws? Is it A, denying a loan to individuals based on neighborhood demographics, B, charging higher rent based on seasonal demand, C. Promoting properties exclusively based on their proximity to public transportation. Or D. Refusing rentals to individuals without references. The answer is A. Denying a loan to individuals based on neighborhood demographics. Redlining refers to the discriminatory practice of denying loans or insurance based on the racial or ethnic composition of an area, undermining fair housing rights protected under the law. Real estate contracts in Minnesota. In Minnesota, what is a required element for a real estate contract to be enforceable? Is it A. a verbal agreement, B. an earnest money deposit, C. consent of both parties, or D. completion within 30 days? The answer is C. consent of both parties. A valid real estate contract in Minnesota must have mutual consent. This is in line with contract law principles that require offer and acceptance. What must a real estate purchase agreement in Minnesota include regarding seller disclosure? Is it A. a financing clause, B. description of property condition, C. names of previous owners, or D. list of all neighboring properties? The answer is B. description of property condition. Minnesota requires sellers to disclose the condition in writing. This helps buyers make informed decisions regarding property health and safety.
If you're finding this helpful, please take a minute to like this video and subscribe to our channel for more practice exams, useful tips, and complimentary study sessions with Birdsey.
Which of the following is enforceable in Minnesota real estate negotiations? Is it A. a handwritten note, B. a signed digital document, C. an oral promise, or D. a text message agreement? The answer is B. a signed digital document. Minnesota recognizes electronic signatures under the Uniform Electronic Transactions Act, making them valid for real estate transactions, provided consent and agreement. In Minnesota, who holds the earnest money after a real estate contract is signed? Is it A. the seller, B. the buyer, C. an escrow agent, or D. a courthouse office? The answer is C. an escrow agent. Escrow agents hold earnest money in Minnesota, which ensures the funds are neutrally kept and secure, pending closing conditions. How long does a buyer in Minnesota have to cancel a new real estate purchase contract after signing? Is it A. 3 days, B. 5 days, C. 7 days, or D. 10 days? The answer is A. 3 days. Certain new real estate contracts in Minnesota, such as timeshares or condos, provide a 3-day rescission period to protect buyer interests. What is the statute of limitations for taking legal action on a breach of written real estate contracts in Minnesota? Is it A. 2 years, B. 6 years, C. 10 years, or D. 12 years? The answer is B. 6 years. According to Minnesota law, the statute of limitations for legal actions regarding breach of written contracts, including real estate contracts, is 6 years, which helps ensure prompt resolution of disputes. In Minnesota real estate contracts, what is a contingency? Is it A. a clause that automatically cancels the contract, B. an optional addition with no legal standing, C. a condition that must be met before the contract is binding, or D. a financial penalty for late payment? The answer is C. a condition that must be met before the contract is binding. A contingency in Minnesota real estate contracts refers to a specific condition or requirement that must be satisfied for the contract to move forward and remain enforceable. Disclosures required by Minnesota law. What disclosure is required by Minnesota law for a seller regarding environmental issues on the property? Is it A. radon detection disclosure, B. mold growth disclosure, C. lead paint disclosure for homes built after 1978, Or D, natural disaster history disclosure? The answer is A, radon detection disclosure. Minnesota law specifically mandates sellers to disclose any radon hazards within residential properties. This includes information about any radon testing conducted or mitigation systems installed. Which of the following statements correctly describes a seller's disclosure obligation under Minnesota law? Is it A, the seller must disclose known material facts affecting the property? B, the seller can withhold information if the buyer does not ask questions? C, only defects that have been repaired need to be disclosed? Or D, disclosure is only necessary if the buyer intends to finance the property? The answer is A, the seller must disclose known material facts affecting the property. Under Minnesota law, sellers must provide buyers with information about any known material facts that might influence the buyer's decision-making process or the property's market value. In Minnesota, what is the purpose of the well disclosure statement required in real estate transactions? Is it A, to disclose any abandoned wells on the property? B, to ensure all wells are fitted with the latest technology? C, to guarantee water quality standards are met? Or D, to provide detailed maintenance records for the last 10 years? The answer is A, to disclose any abandoned wells on the property. Minnesota law requires a well disclosure statement when selling real estate to notify the buyer of existing wells, including inactive ones, to ensure awareness and compliance with safety standards. What is the responsibility of the seller regarding methamphetamine production disclosure in Minnesota? Is it A, disclose any known methamphetamine production contamination? B, remediate the property before listing? C, share law enforcement records of the property? Or D, no disclosure is necessary if the property is vacant? The answer is A, disclose any known methamphetamine production contamination. Under Minnesota law, it is mandatory for sellers to disclose any knowledge about methamphetamine production in the property due to potential health hazards posed to buyers. Which document must the seller provide to the buyer concerning property disclosures under Minnesota real estate law? Is it A, property condition disclosure statement? B, homeowners association guidelines? C, insurance claims history? Or D, neighborhood crime statistics? The answer is A, property condition disclosure statement. Sellers in Minnesota must provide a property condition disclosure statement to buyers to outline any known material issues with the property, ensuring transparency in real estate transactions. What is the seller's responsibility regarding the disclosure of underground storage tanks on the property in Minnesota? Is it A, no disclosure is required? B, disclosure is required only if tanks exceed a certain size? C, the seller must disclose the presence and condition of any underground storage tanks? Or D, disclosure is only required if tanks are actively used for fuel storage? The answer is C, the seller must disclose the presence and condition of any underground storage tanks. Minnesota law requires sellers to disclose any underground storage tanks to inform buyers of potential environmental risks linked to the property. This prevents unforeseen liabilities and encumbrances. What information must sellers provide about radon in Minnesota real estate transactions? Is it A, they must provide a government-issued radon hazard report? B, only previous mitigation attempts must be disclosed? C, sellers need to offer a fact sheet and disclose any known radon concentrations? Or D, disclosure is only necessary if the radon level exceeds federal limits? The answer is C, sellers need to offer a fact sheet and disclose any known radon concentrations. Minnesota law requires sellers to disclose any known radon concentrations and provide a radon fact sheet, ensuring the buyer is aware of radon risks and mitigation options.
Notice the code in the corner? When you're stumped by a question, enter it at birdsey.ai for immediate help. Enjoy complimentary study sessions and access to hundreds of additional questions to help you pass your exam with confidence.
Transfer of title in Minnesota. What is required in Minnesota for the legal transfer of real estate ownership? Is it A, a verbal agreement, B, a notarized deed, C, a witnessed transaction, or D, an oral promise? The answer is B, a notarized deed. In Minnesota, a real property transfer must involve a written deed that is properly acknowledged and notarized to be recorded legally. This ensures a legitimate change in ownership per state laws. Who must sign a deed in Minnesota for a valid real estate transfer? Is it A, the buyer, B, all owners of the property, C, a legal representative, or D, the real estate agent? The answer is B, all owners of the property. In Minnesota, all owners of the property must sign the deed. This ensures that the transfer is complete and without disputes from other owners, as stipulated by state regulations. How is a lien on property addressed during title transfer in Minnesota? Is it A, transferred with the property, B, cleared by the seller, C, ignored if small, or D, assumed by the buyer? The answer is B, cleared by the seller. Liens against a property must be resolved by the seller before or during the title transfer to ensure the buyer receives a clear title, complying with Minnesota's property laws. What is the role of the county recorder's office in title transfer in Minnesota? Is it A, conducts the property appraisal, B, records the property's deed, C, sets property tax rates, or D, handles delinquent taxes? The answer is B, records the property's deed. The county recorder's office in Minnesota records property transactions, ensuring deeds are publicly documented to confirm and protect the legal transfer of property ownership. What happens if a deed is not recorded in Minnesota? Is it A, automatically voided, B, challenges arise with third parties, C, no impact on ownership, or D, carries a penalty? The answer is B, challenges arise with third parties. Failure to record a deed in Minnesota does not invalidate it between the parties, but exposes it to challenges from third parties who might claim interest or rights, impeding the clarity of ownership. What document is used to transfer ownership of real estate in Minnesota? Is it A, mortgage, B, promissory note, C, deed, or D, lease? The answer is C, deed. In Minnesota, a deed is the required document to legally transfer the ownership of real property. It specifies the transferor and transferee, as well as the property description. What type of deed guarantees the most protection to the grantee in Minnesota? Is it A, quitclaim deed, B, special warranty deed, C, general warranty deed, or D, bargain and sale deed? The answer is C, general warranty deed. A general warranty deed in Minnesota provides the most protection, guaranteeing the title against all claims and defects arising before, during, or after the grantor's ownership. It is ideal for ensuring peace of mind in real estate transactions. Earnest money and escrow in Minnesota. What is the primary purpose of earnest money in a Minnesota real estate transaction? Is it A, to guarantee the payment of the real estate commission, B, to cover the seller's closing costs, C, to demonstrate the buyer's serious intent in purchasing the property, or D, to pay for home inspection fees? The answer is C, to demonstrate the buyer's serious intent in purchasing the property. In Minnesota, earnest money serves as a good faith deposit by the buyer, intended to show the seller a serious intent to proceed with the transaction. It provides some security for the seller if the buyer fails to meet the terms. What is a common practice regarding the handling of earnest money in Minnesota real estate? Is it A, it is immediately transferred to the seller? B, it is deposited into a trust account held by the broker? C, it is used to pay off the seller's mortgage? Or D, it is immediately returned to the buyer after acceptance of the offer? The answer is B. It is deposited into a trust account held by the broker. Minnesota law requires that earnest money be deposited into a trust account overseen by the real estate broker managing the transaction. This ensures funds are protected until the transaction is finalized or terminated. Under what condition might a buyer in Minnesota be entitled to a return of their earnest money deposit? Is it A, if the buyer simply changes their mind about the purchase? B, if the terms of the purchase agreement are not met by the seller? C, if the property value increases significantly during escrow? Or D, if the buyer secures a lower interest rate loan? The answer is B, if the terms of the purchase agreement are not met by the seller. Buyers are usually entitled to a refund of their earnest money if the seller fails to fulfill the terms of the contract. It's a standard protection for buyers built into transaction agreements in Minnesota. Who is responsible for holding the earnest money in a Minnesota real estate transaction? Is it A, the buyer, B, the seller's attorney, C, the buyer's lender, or D, the real estate broker's trust account? The answer is D, the real estate broker's trust account. Minnesota law typically requires that earnest money be deposited into a trust account managed by the broker, ensuring that the funds are held securely throughout the transaction. What is a risk to the buyer if earnest money is not properly managed in Minnesota? Is it A, risk of contract breach by the seller? B, loss of funds without obtaining property rights? C, the property does not appraise at the value offered? Or D, interest on the earnest money cannot be earned? The answer is B, loss of funds without obtaining property rights. Improper handling of earnest money can cause it to be improperly released or utilized, potentially resulting in financial loss for the buyer if the transaction does not proceed as anticipated. Funds must be securely managed in escrow. How long does a broker in Minnesota have to deposit earnest money into an escrow account after receiving it? Is it A, 1 business day, B, 3 business days, C, 5 business days, or D, 7 business days? The answer is B, 3 business days. Minnesota law mandates brokers to deposit earnest money into an escrow account within 3 business days of its receipt to ensure the proper safeguarding and handling of the client's funds. What happens to the earnest money in Minnesota if the real estate transaction fails due to financing issues? Is it A, automatically refunded to the buyer, B, held until both parties agree on the release, C, transferred to the broker, or D, forfeited to the seller? The answer is B, held until both parties agree on the release. In Minnesota, earnest money is held in escrow and can only be released when both the buyer and seller agree, ensuring protection for both parties in case of transaction breakdown.
Your input is valuable. Share your study tips, challenges, or thoughts about the exam in the comments section. Let's help each other succeed.
Minnesota real estate taxes. Which of the following is a primary component used to calculate Minnesota property taxes? Is it A, market value, B, building materials, C, current mortgage, or D, property insurance? The answer is A, market value. Minnesota property tax calculations start with the market value of the property, which is then adjusted by various factors, including the classification rate and local tax rates. What is a homestead classification in the context of Minnesota property taxes? Is it A, a tax penalty for non-residential properties, B, a tax exemption for agricultural land. C, a tax benefit for primary residences. Or D, a tax incentive for commercial developments. The answer is C, a tax benefit for primary residences. In Minnesota, homestead classification reduces the taxable market value for residents who live in their own homes, lowering their property tax compared to non-residential or investment properties. How often are Minnesota property taxes typically assessed? Is it A, monthly, B, biannually, C, annually, or D, once every 5 years? The answer is C, annually. Minnesota assesses property taxes annually, meaning the values and classifications are reviewed every year to estimate the upcoming property's tax obligations. What is the role of the Minnesota Department of Revenue regarding property taxes? Is it A, to set local tax rates, B, to oversee the assessment process, C, to collect property taxes directly, or D, to provide property tax loans? The answer is B, to oversee the assessment process. The Minnesota Department of Revenue ensures proper assessment processes are followed by local assessors and provides guidance to ensure tax equity and accuracy across the state. Who is typically responsible for assessing a property's value for tax purposes in Minnesota? Is it A, the property's owner, B, county assessors, C, Minnesota state appraisers, or D, real estate brokers? The answer is B, county assessors. In Minnesota, county assessors are charged with assessing the value of properties for tax purposes to ensure taxes reflect current market values and adhere to regulations. What is the significance of truth in taxation statements in Minnesota real estate? Is it A, they estimate a property's future market value, B, they notify taxpayers about proposed property tax increases, C, they calculate the tax rate for different property types, or D, they provide tax deferral options for senior citizens? The answer is B, they notify taxpayers about proposed property tax increases. The truth in taxation statements ensure transparency by informing Minnesota taxpayers about proposed tax rate changes and allowing them to participate in the public discussion. This process emphasizes taxpayer education and engagement. Which organization publishes the property tax levy limits in Minnesota? Is it A, Minnesota Department of Revenue, B, local county assessor's office, C, Minnesota Real Estate Board, or D, governor's office? The answer is A, Minnesota Department of Revenue. The Minnesota Department of Revenue sets levy limits to control the maximum property tax that local governments can impose, aiming to balance funding needs with taxpayer affordability. Minnesota real estate licensing and regulation. What is the minimum age requirement to apply for a real estate salesperson license in Minnesota? Is it A, 18 years old, B, 21 years old, C, 19 years old, or D, 20 years old? The answer is B, 21 years old. In Minnesota, an individual must be at least 21 years old to apply for a real estate salesperson license, ensuring maturity and responsibility in handling transactions. This requirement is mandated by the state's regulatory authority to maintain industry standards. Which agency is responsible for regulating real estate licenses in Minnesota? Is it A, Minnesota Bar Association, B, Minnesota Real Estate Commission, C, Minnesota Department of Commerce, or D, Minnesota Housing Authority? The answer is C, Minnesota Department of Commerce. The Minnesota Department of Commerce is charged with regulating real estate licenses. It ensures compliance with state laws, manages licensing, and enforces standards to protect consumers. How often must Minnesota real estate licensees complete continuing education to maintain their license? Is it A, every year, B, every 2 years, C, every 3 years, Or D, every 5 years? The answer is B, every 2 years. Minnesota mandates real estate licensees to fulfill continuing education requirements every 2 years to ensure industry professionals remain knowledgeable of current practices and legal standards. What is the purpose of the Minnesota Real Estate Education, Research, and Recovery Fund? Is it A, to support real estate charities, B, to pay commissions to licensees, C, to compensate people harmed by a licensee's actions, or D, to fund marketing and advertising? The answer is C, to compensate people harmed by a licensee's actions. The Minnesota Real Estate Education, Research, and Recovery Fund compensates those financially harmed due to a licensed agent's wrongful conduct. This protection helps maintain public trust in real estate transactions. What happens if a Minnesota real estate licensee fails to renew their license on time? Is it A, they are automatically fined, B, their license is suspended until renewal fees are paid, C, they must cease any real estate activities until the license is renewed, or D, they continue to practice normally with no penalties? The answer is C, they must cease any real estate activities until the license is renewed. In Minnesota, real estate professionals must cease all real estate activities if their license expires. Engaging in any real estate transactions without an active license is a violation of state law. What is the required pre-license education hours for a real estate salesperson in Minnesota? Is it A, 30 hours, B, 60 hours, C, 90 hours, or D, 120 hours? The answer is C, 90 hours. Minnesota law requires aspiring real estate salespersons to complete 90 hours of pre-license education, which is divided into 3 courses of 30 hours each, covering various essential topics. Who can real estate licensees contact in Minnesota if they have a grievance with their brokerage? Is it A, Minnesota Realtors, B, Legal Counsel, C, Minnesota Bar Association, or D, Local Board of Realtors? The answer is B, Legal Counsel. Licensees in Minnesota are encouraged to consult legal counsel when filing grievances, as it ensures proper legal procedures and protections are followed. Minnesota Department of Commerce, DOC. What is one of the main functions of the Minnesota Department of Commerce, DOC, in real estate? Is it A, enforcing financial responsibility of licensees, B, setting interest rates for loans, C, managing property appraisals, or D, issuing building permits? The answer is A, enforcing financial responsibility of licensees. The Minnesota DOC plays a critical role in maintaining the financial accountability of real estate licensees, ensuring they are responsible to their clients. Which entity is responsible for enforcing real estate regulations in Minnesota? Is it A, Minnesota Bar Association, B, Minnesota Department of Commerce, C, Local City Council, or D, Federal Housing Administration? The answer is B, Minnesota Department of Commerce. The Minnesota Department of Commerce oversees the enforcement of state real estate laws, ensuring compliance and handling violations. How often must Minnesota real estate licensees complete continuing education as mandated by the DOC? Is it A, every year, B, every 2 years, C, every 3 years, or D, every 5 years? The answer is A, every year. Licensees in Minnesota need to complete continuing education annually as per DOC rules to stay abreast of industry changes and legal requirements. What action can the Minnesota DOC take if a licensed real estate professional violates ethical standards? Is it A, issue fines and suspend or revoke licenses, B, promote them to a higher rank, C, ensure their employment with a government agency, or D, file a criminal lawsuit? The answer is A. Issue fines and suspend or revoke licenses. The DOC has the authority to enforce actions such as fines, suspension, or revocation of licenses when there are violations of ethical standards. What role does the Minnesota DOC play in regulating real estate transactions? Is it A. Approving all property sales in the state, B. Ensuring compliance with real estate laws, C. Issuing deeds for property ownership, or D. Setting property tax rates? The answer is B. Ensuring compliance with real estate laws. The Minnesota DOC plays a key role in ensuring that real estate transactions comply with state laws, upholding integrity within the industry. Let's continue with a review of Minnesota real estate finance. Loan fundamentals. What is the primary purpose of a mortgage in real estate finance? Is it A. To transfer property ownership, B. To secure a loan with real estate, C. To determine property value, or D. To insure the property? The answer is B. To secure a loan with real estate. A mortgage is a legal agreement where the borrower pledges real estate as collateral for a loan. The lender receives a security interest in the property to ensure repayment. This is a common financing practice in Minnesota. Which entity typically services loans by collecting payments and managing escrow accounts? Is it A. Title company, B. Loan originator, C. Loan servicer, or D. Real estate broker? The answer is C. Loan servicer. Loan servicers are responsible for managing the maintenance of loan accounts, including payment collection and escrow account management. In Minnesota, servicers must comply with state and federal regulations when performing these duties. What document details the borrower's promise to repay the loan with interest? Is it A. Deed, B. Promissory note, C. Mortgage agreement, or D. Insurance policy? The answer is B. Promissory note. A promissory note is a legal document that outlines the agreement for the borrower to repay the loan amount with interest. This document is crucial in real estate transactions in Minnesota. Which type of loan involves raising the principal balance over time rather than repaying it? Is it A. Reverse mortgage, B. Fixed rate mortgage, C. Adjustable rate mortgage, or D. Balloon mortgage? The answer is A. Reverse mortgage. A reverse mortgage is designed for seniors where borrowers receive payments against their home's equity. The balance increases over time, repayable upon certain conditions like selling the home. When a borrower defaults on a loan, what process may a lender initiate to recover the debt? Is it A. Foreclosure, B. Short sale, C. Refinancing, or D. Title transfer? The answer is A. Foreclosure. Foreclosure allows a lender to repossess or sell the property used as collateral due to the borrower's default. In Minnesota, foreclosures are common when strict adherence to repayment terms is unmet. In Minnesota, what is a key characteristic of an adjustable rate mortgage, ARM? Is it A. Fixed interest rate, B. Varies based on an index, C. Interest is compound annually, or D. Guaranteed lower rates than fixed-rate mortgages? The answer is B. Varies based on an index. Adjustable rate mortgages have interest rates that vary based on a specific financial index, meaning payments can increase or decrease over the life of the loan. What type of insurance must Minnesota lenders require borrowers to obtain to protect against default? Is it A. Title insurance, B. Mortgage insurance, C. Homeowners insurance, or D. Flood insurance? The answer is B. Mortgage insurance. In Minnesota, lenders require private mortgage insurance, PMI, for borrowers with less than a 20% down payment to protect against borrower default.
Notice the code in the corner? When you're stumped by a question, enter it at birdsey.ai for immediate help. Enjoy complimentary study sessions and access to hundreds of additional questions to help you pass your exam with confidence.
What type of loan specifically requires the property to meet minimum property standards set by the issuing agency? Is it A, conventional loan, B, Federal Housing Administration, FHA loan, C, Veterans Affairs, VA loan, or D, U.S. Department of Agriculture, USDA loan? The answer is B, Federal Housing Administration, FHA loan. FHA loans mandate properties to meet specific building standards to protect lenders from underwriting substandard assets. These standards are enforced to ensure the safety, soundness, and livability of the home for the duration of the loan. Which loan type offers benefits such as no down payment for qualified borrowers who must also be veterans, active duty service members, or certain members of reservists or National Guard? Is it A, conventional loan, B, Veterans Affairs, VA loan, C, Federal Housing Administration, FHA loan, or D, jumbo loan? The answer is B, Veterans Affairs, VA loan. VA loans are backed by the Department of Veterans Affairs and offer benefits such as no down payment to eligible veterans and military members, making homeownership more accessible for service members. What factor most significantly differentiates FHA loans from conventional loans? Is it A, interest rates, B, down payment requirement, C, government insurance, or D, eligible borrowers? The answer is C, government insurance. FHA loans are uniquely backed by government insurance, which reduces the risk to lenders and allows them to offer more favorable terms to a broader range of borrowers. Which type of loan is specifically designed for properties located in rural areas and offers 100% financing? Is it A, Federal Housing Administration, FHA loan, B, Veterans Affairs, VA loan, C, U.S. Department of Agriculture, USDA loan, or D, conventional loan? The answer is C, U.S. Department of Agriculture, USDA loan. USDA loans, offered by the United States Department of Agriculture, cater to rural property buyers and offer benefits like loans with no down payment to encourage development in rural areas. What is a distinguishing feature of fixed-rate conventional loans compared to other loan types like adjustable-rate mortgages, ARMs? Is it A, interest rate changes annually, B, interest rate stays the same, C, government backing, or D, no down payment required? The answer is B, interest rate stays the same. In fixed-rate conventional loans, the interest rate is constant throughout the life of the loan, offering stability in budgeting for mortgage payments, unlike ARMs, which fluctuate based on market rates. Which type of loan is insured by the federal government and is often accessible to first-time homebuyers with lower credit scores? Is it A, conventional loan, B, Federal Housing Administration, FHA loan, C, Veterans Affairs, VA loan, or D, U.S. Department of Agriculture, USDA loan? The answer is B, Federal Housing Administration, FHA loan, FHA loan. FHA loans are insured by the Federal Housing Administration, making them appealing for first-time homebuyers and those with less than perfect credit, as they offer flexibility in credit requirements. Loan qualifications. What is the minimum FICO score typically required for a conventional loan in Minnesota? Is it A, 620, B, 580, C, 700, or D, 750? The answer is A, 620. Conventional loans usually require a minimum FICO score of 620. Lenders use the score to evaluate the potential borrower's credit risk. Lower scores might qualify for an FHA loan instead. Which type of income documentation is usually required for a self-employed loan applicant in Minnesota? Is it A, 2 years of tax returns. B. 1 month of pay stubs. C. Bank statements from the last month. Or D. Letter from employer. The answer is A. 2 years of tax returns. To verify income stability, self-employed borrowers must provide the last 2 years of tax returns. This ensures the lender can assess consistent earning capability. What is a common debt-to-income DTI ratio limit for qualifying for a mortgage in Minnesota? Is it A. 43%, B. 30%, C. 50%, or D. 55%? The answer is A. 43%. The DTI ratio measures a borrower's ability to manage monthly debt payments. A 43% limit is a general guideline, meaning borrowers should not exceed 43% of their income toward debt servicing. Which type of loan allows for a high loan-to-value (LTV) ratio, making it easier to buy a home with less money down? Is it A. Federal Housing Administration (FHA) loan, B. Veterans Affairs (VA) loan, C. Conventional loan, or D. Jumbo loan? The answer is A. Federal Housing Administration (FHA) loans. FHA loans are popular due to their high LTV ratios, which often allow borrowers to put down as little as 3.5% of the home's value. What is an important factor lenders consider for mortgage pre-approval besides credit score and income? Is it A. Employment history, B. Current housing expenses, C. Net worth, or D. Education level? The answer is A. Employment history. Lenders look at employment history to predict future job stability. A consistent work record with a stable income supports mortgage serviceability. What is a key requirement for FHA loan qualification in Minnesota? Is it A. Minimum 3.5% down payment, B. Minimum 10% down payment, C. No down payment required, or D. 20% down payment? The answer is A. Minimum 3% down payment. FHA loans, as per HUD guidelines, only require a 3.5% down payment, making them accessible for first-time homebuyers and those with lower credit scores. This requirement helps in buying without the usual 20% down payment. The loan application process. During the Minnesota loan application process, which document summarizes the borrower's debts and liabilities? Is it A. Credit report, B. Appraisal report, C. Title search, or D. Survey? The answer is A. Credit report. A credit report provides a comprehensive list of a borrower's debt obligations and payment history, aiding lenders in assessing creditworthiness as part of the loan application process. What is the purpose of the loan estimate in the loan application process in Minnesota? Is it A. To verify property condition, B. To outline closing costs and terms, C. To confirm employment history, or D. To provide legal advice? The answer is B. To outline closing costs and terms. The loan estimate form outlines the key details and costs associated with a mortgage loan, enabling borrowers to compare offers from different lenders and understand financial commitments. Which party is generally responsible for completing the loan application in Minnesota real estate transactions? Is it A. Buyer, B. Seller, C. Real estate agent, or D. Title company? The answer is A. Buyer. Typically, the buyer fills out the loan application to secure financing for the property purchase, providing lenders with necessary financial information to proceed with the loan process. What role does the underwriter play in the Minnesota loan application process? Is it A. Approves interest rates, B. Analyzes borrower's risk, C. Conducts property inspection, or D. Issues the title insurance? The answer is B. Analyzes borrower's risk. An underwriter plays a critical role by evaluating a borrower's creditworthiness and financial status to determine the risk involved in approving a mortgage loan. Which Minnesota authority oversees the guidelines for the real estate finance process, including the loan application? Is it A, Minnesota Department of Revenue, B, Minnesota Department of Commerce, C, Minnesota Housing Finance Agency, or D, Minnesota Real Estate Commission? The answer is B, Minnesota Department of Commerce. The Minnesota Department of Commerce plays a key role in ensuring real estate finance transactions comply with state regulations, managing licensing, and enforcing relevant guidelines. What is the primary purpose of obtaining a credit report in the Minnesota loan application process? Is it A, to recommend a real estate agent, B, to assess the borrower's credit history and ability to repay the loan, C, to determine the property's appraisal value, or D, to calculate the property tax liability? The answer is B, to assess the borrower's credit history and ability to repay the loan. In the Minnesota loan application process, the credit report helps lenders evaluate a borrower's creditworthiness by examining their credit history, crucial for determining loan approval and terms. Underwriting for Minnesota real estate. What is the main purpose of loan underwriting in Minnesota real estate finance? Is it A, to assess the property's market value, B, to evaluate the borrower's creditworthiness and the loan's risk, C, to arrange the closing of the real estate transaction, or D, to advertise property listings? The answer is B, to evaluate the borrower's creditworthiness and the loan's risk. Underwriting in Minnesota real estate finance involves evaluating a borrower's creditworthiness and assessing the risk of a loan, ensuring compliance with financial regulations and guidelines. What does the loan-to-value ratio, LTV, indicate in underwriting? Is it A, the proportion of the loan amount to the appraised value of the property, B, the ratio of monthly income to monthly debt obligations, C, the property's estimated future value, or D, the total cost of the loan over its term? The answer is A, the proportion of the loan amount to the appraised value of the property. The loan-to-value ratio, LTV, represents the loan amount as a percentage of the appraised value of the property, helping evaluate the loan risk in underwriting. Why is a debt-to-income, DTI, ratio significant in the underwriting process? Is it A, it determines the property's market potential, B, it assesses a borrower's financial ability to repay the loan, C, it sets the interest rate for the loan, or D, it predicts future changes in property value? The answer is B, it assesses a borrower's financial ability to repay the loan. The debt-to-income ratio is used in underwriting to evaluate a borrower's capacity to manage monthly payments and repay the loan, crucial for risk assessment. Which of the following is not a common factor considered during the underwriting process? Is it A, borrower's credit score, B, interest rates, C, property collateral value, or D, borrower's employment history? The answer is B, interest rates. Interest rates are not a direct factor in underwriting. They are set by lenders based on market conditions and regulations, not by underwriting decisions. Which document is primarily used by underwriters to verify a borrower's income? Is it A, the purchase agreement, B, the credit report, C, the tax returns, or D, the property deed? The answer is C, the tax returns. Tax returns are a reliable source for verifying a borrower's stated income, allowing underwriters to confirm financial information used in the loan approval process. What is the primary role of an underwriter in Minnesota real estate finance? Is it A, to market properties to potential buyers, B, to assess the risk of loan applicants for lenders, C, to draft legal contracts between buyers and sellers, or D, to manage escrow accounts for real estate transactions? The answer is B, to assess the risk of loan applicants for lenders. In Minnesota, underwriters play a critical role by evaluating loan applications to assess the associated risks. They help lenders decide on the approval, modification, or denial of a loan application, following state guidelines. Which factor is crucial in the underwriting decision process in Minnesota? Is it A, the borrower's zip code, B, the borrower's employment history, C, the popularity of the neighborhood, or D, the distance to the nearest school? The answer is B, the borrower's employment history. Minnesota underwriting guidelines emphasize evaluating factors such as the borrower's employment history to determine financial stability, as it impacts their ability to repay the loan. Loan closing. What is a closing disclosure in Minnesota real estate transactions? Is it A, a document outlining the buyer's loan qualifications, B, a breakdown of closing costs and financial details for a property transaction, C, a list of properties available for sale in Minnesota, or D, a summary of Minnesota property laws? The answer is B, a breakdown of closing costs and financial details for a property transaction. The closing disclosure is a critical document required by the CFPB's TILA-RESPA Integrated Disclosure Rule. It provides details about the buyer's loan and the transaction's financial terms, necessary for informed consent before closing. In Minnesota, how long before closing must the closing disclosure be delivered to the borrower? Is it A, B, 10 days, C, 3 business days, or D, 1 week? The answer is C, 3 business days. The TILA-RESPA rule mandates that borrowers receive a closing disclosure 3 business days before closing, allowing time to review all closing costs and terms thoroughly. Which party is primarily responsible for preparing the closing disclosure in a Minnesota real estate transaction? Is it A, the buyer, B, the seller, C, the lender, or D, the real estate agent? The answer is C, the lender. According to federal regulations, the lender must prepare and deliver the closing disclosure. This ensures borrowers are fully informed of all costs and terms prior to finalizing the loan. What role does title insurance play in Minnesota's loan closing process? Is it A, it is optional and rarely used in Minnesota, B, protects the lender against defects in the title, C, serves as proof of the property's market value, or D, determines the amount of the closing costs? The answer is B, protects the lender against defects in the title. In the closing process, lender's title insurance is mandatory to protect against potential title issues. It safeguards lenders from financial loss due to title defects or claims undisclosed prior to closing. What is the primary purpose of the escrow account in a Minnesota loan closing? Is it A, helps manage buyers' mortgage payments, B, holds funds to pay ongoing property-related expenses, C, protects buyers' credit score during the closing, or D, secures the seller's agent's commission before closing? The answer is B, holds funds to pay ongoing property-related expenses. In Minnesota, escrow accounts are set up to continuously hold funds for early payments of property taxes, homeowners insurance, and PMI if required, ensuring these obligations are met timely and reducing the default risk. What is the purpose of a deed of trust in Minnesota's loan closing process? Is it A, to transfer property ownership to the lender, B, to secure the borrower's promise to repay the loan, C, to provide tax benefits to the borrower, or D, to finalize the property sale between the buyer and seller? The answer is B, to secure the borrower's promise to repay the loan. In Minnesota, a deed of trust serves as a security instrument, securing the loan by using the property as collateral. It involves the borrower, lender, and a trustee who holds the title in trust until the loan is repaid. Which document in Minnesota confirms that a mortgage has been fully paid and the lien released? Is it A, deed of trust, B, satisfaction of mortgage, C, promissory note, or D, warranty deed? The answer is B, satisfaction of mortgage. The satisfaction of mortgage is filed once a borrower pays off their mortgage. It releases the lien on the property and is crucial for clearing the title in Minnesota real estate finance. Minnesota mortgage disclosure requirements. What is the primary purpose of Minnesota's mortgage disclosure requirements? Is it A, to regulate lender profitability, B, to ensure consumers are fully informed of loan terms, C, to promote real estate development, or D, to lower mortgage interest rates? The answer is B, to ensure consumers are fully informed of loan terms. Minnesota mortgage disclosure requirements are designed to protect consumers by ensuring they are fully informed about the loan terms, costs, and risks associated with obtaining a mortgage. Which document is essential in Minnesota's mortgage disclosure process to inform borrowers of their right to rescind certain transactions? Is it A, loan estimate, B, notice of right to cancel, C, closing disclosure, or D, deed of trust? The answer is B, notice of right to cancel. Minnesota law requires that borrowers receive a notice of right to cancel, informing them of their right to rescind certain mortgage transactions, offering consumer protection against rushed decisions. Under Minnesota laws, how long before closing must lenders provide the closing disclosure to consumers? Is it A, 3 business days, B, 1 week, C, 24 hours, or D, immediately after signing the contract? The answer is A, 3 business days. The closing disclosure, crucial for transparency, summarizes the final terms of the loan and costs. Minnesota adheres to the federal rule requiring this document to be provided 3 business days prior to closing. Which Minnesota statute outlines the requirements for mortgage disclosures? Is it A, Chapter 47, B, Chapter 58, C, Chapter 83, or D, Chapter 115? The answer is B, Chapter 58. Minnesota Statutes Chapter 58 is the legal framework governing the registration of mortgage originators, broker operations, and includes obligations such as mandatory disclosure requirements to protect consumers. Which of the following is a requirement for lenders under Minnesota's mortgage disclosure regulations? Is it A, offering an adjustable interest rate, B, disclosing terms of interest rate changes, C, providing an attorney for closing, or D, guaranteeing the lowest possible interest rate? The answer is B, disclosing terms of interest rate changes. Minnesota mortgage disclosure laws enforce transparency by mandating lenders disclose terms related to interest rate changes, ensuring borrowers are prepared and informed about potential fluctuations in their mortgage payments. What is the purpose of the loan estimate document in the Minnesota mortgage disclosure process? Is it A, to notify borrowers of foreclosure proceedings, B, to provide borrowers with an itemized list of closing costs and loan terms, C, to inform borrowers of their rights under the Fair Housing Act, or D, to offer tax advice related to home purchase? The answer is B, to provide borrowers with an itemized list of closing costs and loan terms. The loan estimate in Minnesota's mortgage process gives borrowers detailed information about loan terms and closing costs. It's crucial for transparency, allowing borrowers to compare loan offers. Which entity is responsible for ensuring compliance with Minnesota's mortgage disclosure requirements? Is it A, Minnesota Department of Commerce, B, Minnesota Housing Finance Agency, C, Federal Reserve Board, or D, Real Estate Brokers Association? The answer is A, Minnesota Department of Commerce. The Minnesota Department of Commerce oversees and ensures compliance with state mortgage disclosure requirements, safeguarding consumer rights during the mortgage process.
Thanks for joining us today. If you found this video helpful, subscribe to our channel for more practice exams, tips, and tricks. And don't forget to visit birdsey.ai for complimentary study sessions with Birdsey, your AI-powered study partner.